Hi there, welcome to kneppyinvests. In this video, I am going to be discussing another profit upgrade a company did release in the past week. That company is Gentrack. For full disclosure purposes, I do actually own this company in my portfolio. And not only will I be discussing a profit upgrade, but I'll be touching upon how the market got this story completely wrong in the lead up to the release of this announcement, because in the preceding 8 trading days before Gentrack released a profit upgrade, the share price fell 30%. And I was myself thinking, is there going to be some bad news coming from this company? Is the market seeing something that the retail investor doesn't know just yet? But in this case, no, the market was completely wrong. And hopefully some shareholders didn't sell out because they saw the share price dropping. Before we look at the profit upgrade and how the market got this wrong, just a few facts in regards to Gentrack. Gentrack is a software company. They provide leading utilities with innovative clean tech solutions, hence clean tech software solution for utilities. I spent a fair bit of time trying to exactly describe what this company does. Founded in 1989, when New Zealand energy sector went through deregulation. So this is or was a New Zealand-based company, but I'm not sure if they can be considered New Zealand-based right now because the CEO is actually based in England. So they have sort of shifted the focus of their business from the New Zealand, Australia area to England. They listed on the ASX 24th of June 2014. So they've been on the ASX for about 7 years. I'm not sure if or how long they've been on the New Zealand Stock Exchange. CEO is Gary Miles. He's been in that role for just about a year. He has 0.25% ownership in Gentrack. And the largest shareholders are Naos Asset Management with almost 20% holding. In fact, they've increased their holdings in this company over the past few months. You'll see some substantial shareholder announcements being released quite frequently in regards to them increasing their holding and almost at the 20% range. I don't think they can go over 20% unless there is some rules about 20%. I forget what those rules are, but if they get above 20%, they have to do something. And Australian Ethical Investments is at 13% right now. The market cap of Gentrack, 176 million at $1.80. And the ticker code for the company is GTK. Briefly touch upon the financials for Gentrack. This is looking at the trailing 12 months in New Zealand dollars. They do report in May and November, so we get the next financial information or results in November, so in about a month's time, just over a month's time. Revenue in trailing 12 months, $101 million. Gross profit margin, 15.3%. Would prefer that to be a little bit higher. And not profitable, so lost $20 million in the trailing 12 months, but they were operational cash flow positive by $19.1 million. And this is the main reason why I do prefer to look at operating cash flow over profits, because a lot of times profits in a 1 year can be affected by abnormal items or one-off items, and that's why you see a massive difference between net profit and operating cash flow over the trailing 12 months for Gentrack. So focus on the operating cash flow. That's the true state of the business in this case. A net cash, $22.4 million, and annual recurring revenue at $40.4 million, which was up 1.5% on the previous year. So it is climbing at a very small or slow rate. But when you look at the annual recurring revenue, typically I times that by 10 to get an indication of what a possible value of a software company is. But because Gentrack is not slowing or is not growing at a great rate, there is a bit of a discount to that 10 times multiple. So I'd probably say 5 times. So maybe a good valuation for Gentrack would be around about the 200 million mark at this point in time. And if they can grow the annual recurring revenue again from now, that valuation would be on the low side. Onto the financial history for Gentrack. This is looking at the half year revenue, cash flow from operations, and earnings or profits from continuing operations. From when they listed on the ASX back in 2014 to around 2018, we saw a really good solid increase in revenue, even cash flows. And that's when we look at the chart, you'll see the share price of Gentrack did rally quite well in the first 3 or 4 years they were listed on the ASX. In fact, the share price got to almost $8 at one point. But over the last few years, we have seen the revenue just level off and the cash flow from operations level off or maybe even come down a bit. And the profitability of Gentrack has been impaired over the past few years. And you'll see this in the chart. It really reflects the fact that Gentrack has had some problems in the past few years. They are trying to correct, and possibly they have corrected based off some of the recent information the company has released. And these sort of situations, when you do see the share price pull back a fair bit, which we'll see in the chart, that does lead to possible opportunities to buy into a company that is profitable, operational cash flow positive, has the potential to grow in the future, which I think Gentrack does have, but at much better values than if they were kept on growing. So the way I look at Gentrack is, I wouldn't call it a very high quality company, but I think the valuation of the company is such that I think the risk rewards is more in favor of the rewards than the risks. Now, on to the most previous guidance they gave us up until the profit upgrade, which I'll be talking about in the next slide or two. And this is from their investor strategy update on the 16th of June, looking at annual recurring revenue. But I really want to focus on the total revenue and the cash EBITDA. So total revenue, they are expecting for financial year 21, which will come to a completion if they're releasing in May. So it should come to completion at the end of September. So it's just finished their financial year. Revenue expected to be about $100.5 million. Cash EBITDA at about 10% of that. This guidance they've been giving the market for about 6 months. I first saw this guidance in January, if I remember correctly, of this year. They gave this guidance again when they released their half-year results in May, and then again on the 16th of June. This is Gentrack's chart, daily chart, going back to late April, early May. And we did see the share price rally start of June. In fact, the share price went from about $1.40 to around $2. Not a lot of volume. And when I do see the share price of a company I own or I'm thinking of investing in rally on no news, there is a bit of a concern there because it's not rallying because of any good financial information, any good news. It's just a dearth of sellers at that point in time. Some buyers wanted to come in, and because there was a lack of sellers, they pushed the share price higher, even though there wasn't a lot of trading during that rally. And then we saw the share price go sideways for about 3 or 4 months, up until about 2 weeks ago, when all of a sudden the share price started to fall off a cliff, again on very low volume. So a complete opposite to what we saw in June when there were no sellers, just some buyers coming into the market. In this situation, there were no buyers, just a few sellers who wanted to sell, and that just forced the share price down from about $1.90 all the way down to $1.42. Now, when you do see the share price falling like this, some shareholders will get a little nervous. They will see the share price plunging, and they will believe that the market knows something they don't know, and there's bad news just around the corner. So there would have been a few shareholders who sold out simply because they saw the share price falling. That is a very natural thing to do, and why psychology plays a large part in the short-term movements of share prices of companies. When you see a share price fall about 30% in 8 days, the general tendency is to believe that the market knows something you don't know, but most likely that's never the case. Another way to look at this was the market was expecting the financial year 21 results for Gentrack to be worse than expected, but usually if that does happen, you're going to see a little bit more volume than what we saw with Gentrack. I think the most likely scenario, someone just decided to set out on day number 1, and then on day number 2, someone saw they saw the share price down a little bit from the previous day, and they thought, it's moved into a downtrend, short-term downtrend, I should set out too. Then the next day, someone else saw the share price down, and they thought, oh, the market knows something I don't know, I should sell out. So it's some sort of positive feedback loop, and that's why every single day over an 8-day period, we saw the share price of Gentrack just fall until it went from $1.90 to $1.40. No financial news, no news from the company until they released a profit upgrade on the September 30, which did put a serious halt to that correction in the share price. Not only was it the numbers, or was it the profit upgrade in this announcement that made me quite bullish about Gentrack moving forward. It was also some of the wordings they used in this, or in the commentary, and just the wordings they used showed me that management has some positive sentiment moving forward. Now, you might say, well, management should always spin this in a positive light. That's not always the case. In fact, I went through some of Gentrack's commentary in their reports, some of their updates over the past few years, and they have been quite conservative, quite muted with negative sentiment in previous guidance or previous outlook. So this is much more positive sentiment and wording from the management. For instance, they mentioned stronger than expected. They also mentioned early positive signs of our strategy. And so that's very positive sentiment. That's what I want to see in the commentary. And that tells me the management is excited, and I think they will increase expectations moving forward. And then you get to the numbers. They've increased revenue for expectations from 100.5 to 105 million. So that's only a 5% increase from the previous guidance, but that is an increase. That's all you need to get the market excited. And EBITDA is expected to be now around 12 million instead of 10 million. And that's a 20% increase. Again, it might seem small when you're looking at 10 to 12 million, but still, it's an increase in expectations. So there are very positive signs for Gentrack moving forward. And I believe this period, about 2 or 3 years, where we have seen the Gentrack share price under pressure, could be coming to an end. We might see a fair bit of positive news from this company in the next few years. The market reaction was what you should expect when a company does release a profit upgrade. The other thing that helped Gentrack on this day was they released this profit upgrade when the overall market was positive. There was a little bit more positive sentiment in the overall market, and that also helped the share price of Gentrack increase by 24% or 34 cents, increasing from about $1.40 to $1.77. The other thing I really liked about the trading on this day for Gentrack was that most of the increase happened in the first 30 minutes, and then the share price just went sideways for the rest of the day, which is telling me there wasn't a lot of selling during that period. So there was a possibility, because we saw the share price drop 30% in the previous 8 days, there might be some nervous shareholders who saw this increase in the share price and saw the opportunity to sell out, not at $1.40, but at $1.76.5. And we didn't see a lot of that, which is a good sign moving forward for Gentrack. This is the updated chart for Gentrack, valid to 11:15 on the 4th of October. This does go back 1 year to October 2020. Nothing too exciting with this chart, apart from that rally in the share price in June of this year, where we saw the share price go from about $1.40 to $2, the consolidation period for about 3 or 4 months, and then we saw that 8-day period where the share price just fell off a cliff, falling from $1.90 back to $1.40. And at the end of that 8-day correction in the share price finished in line with the share price we saw before that rally in June. I'm not sure if that means anything, probably not. But when the company did release this profit upgrade, share price rallied 24%. Didn't quite get back up to the share price we saw before this correction, which is natural enough. It would have been hard to see the share price get back up to that level. But over the past few days after that profit upgrade, we have seen the share price stabilize at around about $1.70 to $1.75. We did see the share price fall about 5% on the 1st of October when the overall market fell about 2% on that day. And I think the share price of Gentrack will oscillate with the markets. A fair bit of volatility in the markets right now. Doesn't know if it should go up or should go down. Last time I looked, the markets on the 4th of October were up about 1.5%, even though they were down 2% on the 1st of October and up about 2% the day previous to that. So a lot of volatility in the market, and companies like Gentrack will trade with that volatility. And because there's not a lot of liquidity in this company's shares, sometimes if we do see the down or big down day in the market, that can send the share price down 10% on not much volume, just because all you need is one or two shareholders who just need to get out. They just can't handle the volatility anymore. I am bullish Gentrack over the long term, so this is a long-term hold for me. And if I do see the share price get down to, say, between $1.20 and $1.30, I would buy some more shares in this company. Now on to, for the final thing, the long-term chart for Gentrack, weekly chart going back to when they listed on the ASX in 2014. Gentrack was a bit of a market darling for a period of time between about 2015-16 and 2018. Share price increased from about $1.50 all the way to a high of $6.75, just short of $7. A nice, well-defined uptrend. That uptrend finished towards the end of 2018, and then the share price was under pressure for a long period of time. In fact, the problems with Gentrack preceded COVID-19. Now, COVID-19 did not help, particularly because a lot of Gentrack's focus, or business focus, is in England, and the lockdowns in England did affect this company. And we saw the share price get to a low of 75 cents during the COVID-19 financial panic. So a massive fall for grace for Gentrack during that period. So there was about a 9-month period where we saw the share price fall from about $6 or $5 to that low of 75 cents. But since that low, we have seen the share price consolidate, and it does want to move up, looks like. We've seen an increase in volume over the past 5 months. That is exciting. That's showing me that there is more interest in the market around Gentrack. The main thing I'm looking forward now, even though this is a long-term hold for me, is to see the share price rally above $2 on or coinciding with some positive financial news. Now, if the share price fell to about $1.20, $1.30, I would buy some more shares in this company. If the share price gets above $2.10, I might even buy some more shares there, because that would be confirmation the share price is moving up and is moving into an uptrend. That's all I have for this Gentrack profit upgrade video. If you have any questions about this company or any other company on the ASX, I'd love to hear your opinions, your thoughts, your questions. Leave it in the comments section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.